Good afternoon, everybody. Good afternoon, ladies and gentlemen. So as you can see, we're tracking. GameStop's about to blast off something stupid. And I want you to notice something, ladies and gentlemen. When it comes to this stock shit, your boy's undefeated. We got buy orders holding us up. 100% about to blast off. Get ready for a massive pumpage on the memes. As SPY pulls back as predicted, I told you guys SPY would hit 600 and pull back. SPY would hit 600 and pull back. Ladies and gentlemen, SPY has hit 600. SPY has pulled back. Has the right to believe what they want, but you follow this channel for my opinions, and I think that we are actually going to start pulling back and still lead into that correction, that bigger downside. I have not changed my mind on that, and until I see some type of technicals to make me believe what they want. But I'm thinking that we might be actually leaning more red. RSI getting way up tomorrow. SPY got a crazy pump to the upside. Unsustainable, okay? This is not. So SPY hit 600 and pulled back exactly as expected. Bearish divergence playing out. SPY moving to the downside. Bitcoin decoupling from the market. And AMC and GME pumpage. Because why? Because why? Because Datazero said so. I control the markets. Do you see, as soon as I come online, AMC moves? Do you see the power? Your boy controls the markets, bro. Your boy controls the markets. Time to make $1 million. It's time to make $1 million. Benjamin with the gifted. This is DataZero's Power Hour Party. This is DataZero's Power Hour Pump Party. DataZero's Power Hour Pump Party. When I go live, the pumpage begins. When I go live, the pumpage begins. When I go live, the pumpage begins. Kai with the $1.99, you dig? SPY pulling back as well. SPY losing key support and resistance of 595.41. SPY losing key support and resistance. Benjamin with 5 fucking gifted. Benjamin out of control with 5 gifted. AMC Baggy was just gifted a free membership. I told you someone's buying. I told you somebody's buying. It was BlackRock. I told you hedge funds were buying. I told you guys hedge funds were buying. Chris with the gifted. Chris with the gifted. And Danny with the 2. You guys are going bananas. Let's go, baby. Thank you so much, Chris and Danny. SPY will be starting to tank soon, especially if we confirm. If we can confirm this 959 as resistance, SPY will be tanking. GameStop up 6% on the day. Bull flag is about to break out. GameStop about to make stupid moves. If you don't know what's happening, then you don't know what's happening. GameStop is about to go on a massive pump. This is the exact same fractal. Ladies and gentlemen, are you ready? DataZero's Moas map is the best. This is the exact same price action, y'all. The exact same price action. Look at it. Bro, we're going to the moon. If you don't have GameStop call options, you're stupid. You're stupid. Oh my God! Kai Supreme with another $1.99, and Homie with the first super chat ever. Magic with a whopping 10-piecer right off of the bat, baby. Let's go. Thank you, Magic, for the 10-piecer. Hopefully you guys are ready for a controlled squeeze, because that's what's coming. All right, yo, check this out, y'all. So the market is down, but AMC and GME are up, and that is not all, ladies and gentlemen. You want to like and subscribe right now, because we are live tracking all of this. If you don't know what's happening, you are about to hold the bag. GameStop is about to make a massive move, and only the DZ apes know it. If you've been watching other YouTubers who think they know TA, they don't know shit. Here is the truth. Here is the real plan, and you better get with it, or you are going to be holding that fucking bag. So if you don't want to hold the bag again, make sure you like and subscribe right now, because GameStop is about to make a unprecedented move, and this could be the last move yet. Just take a look at it in all its glory. GameStop consolidating in the same exact structure before a massive move. We have the bull flag consolidation right now. If this breaks out, GME goes to the moon. Buy orders holding GME up. Buy orders holding GME up. Somebody's buying the dips. Guys, thank you guys so much for the super chats. Ruben with a 2 as well. Ruben with a 2 as well. And Kai Supreme with another 199. Do we gotta put a goal up there now. We gotta pull a goal. You guys I have to do it now. I have to do it. It's for the Power Hour pump. Ooh, wow. Guys, thank you so much for everything. I guess I can't do it. I don't know. Okay, never mind. I guess I'm not making a goal. Thank you guys so much for the super chats. I was going to make AMC and GME go up, but it won't let me. Thank you guys for the multiple super chats. Let me shout out everybody who just gave a super chat. I'm going to shout out everybody who just gave out the supers. We got Kai Supreme, Ruben, Magic, Chris, Danny, Kai Supreme, and Benjamin going absolutely ham. Thank you guys so much. I appreciate you. 220 people in the building. 8 brand new members already. 8 brand new members to the fam. Welcome to the DZ fam. Well, looks like their price target's wrong. Thank you, everybody, for watching. If you understand what's happening, then you better clock in, because GameStop's ready to go to the moon. Boom, baby! Subscribers just exploded. We're headed straight to 15,000. Your boy's blowing up. Only the AMC, only the DZ fam knows what's coming. Only the DZ fam knows what's coming. Only the DZ fam, baby. We are the only ones. Everybody else has no idea what is coming. They don't understand that AMC is just broke out of macro accumulation. AMC is breaking out of macro accumulation. They don't understand it. And they don't know what's coming. So they're going to be holding the bag. If you don't want to hold the bag, hit that like button and subscribe right fucking now. Sengal member for 5 months. Sengal member for 5 months. Thank you for holding it down for the 5 months, brother. Listen, we hold it down. And money, yeah, we making it now. You know what it is. I'm building my up from the ground. So SPY is pulling back as expected. If SPY confirms 59541 as resistance, SPY will see more downside. I told you guys SPY will be breaking down after hitting 600 and pulling back. So if you would have literally listened to me, you could have did a $600 put and been printing this whole entire time. Ladies and gentlemen, SPY pulling back as predicted. Bitcoin at 89,000. Bitcoin trying to consolidate right around that 90,000 range. This is bullish for BTC. GameStop and AMC are ready to make a massive move, and nobody knows it but the DZ apes. I think the speech already happened. I think the speech already happened. There is a Fed speech today, but I think it already happened. Let me see here. We do have a Fed speech today. Today's Thursday. And we have a Fed speech. Oh, it is at 3. And PPI dropped. PPI came out slightly higher than expected. Fed probably going to crash the market.
Thank you, Dale.
Get ready for those putters. SPY confirming 59541 as resistance. Get ready for those puts. Now is not the time for GameStop to break out, son. You must understand the process. This is not breakout time. This is consolidation time. GameStop's doing exactly what it's supposed to do right now. GameStop's doing exactly what it's supposed to do right now. That's why we have buy orders right here. People are buying. That's why the option chain's going crazy. You have nothing to worry about. All you must do is relax and enjoy the show. That's all you have to do at this point. DataZero has it all under control. So don't worry your little heads, ladies and gentlemen. Just like, subscribe, and enjoy the show. I repeat, like, subscribe, and enjoy the fucking show. We just hit 14,340 subscribers. We're blowing up out of control. We're getting mad subscribers every single day and night. Subscribers are blowing up, 14,340 subscribers. We're one of the top AMC and GME YouTube channels, so anytime anyone looks for AMC and GME, we come right up. We are one of the top AMC and GME channels, and we changed the AMC and GME game because instead of people being blind, now they can fucking see. Instead of you having to crawl through the darkness alone, I give you the light so you can see. Like and subscribe for the light and the darkness. I am the light and the darkness. Like and subscribe to be illuminated. Like and subscribe to be illuminated. Spy's dumping, y'all. Spy's dumping. Spy's dumping. Those puts cashing out already. Puts cashing out already. Looks like the puts are putting in work already. 595 it would have been. It's too late now. The 595 puts, yeah. It's too late, though. We're already at 593.59. 595 already played out. When I go live, the market pumps. All right, we're at 14,341. We're blowing up. Thank you. Shout out to all the new subscribers. Shout out to all the new subscribers. If you keep moving your puts lower and lower, you won't be able to get any payment. Is this the Fed speech or what? Why can't I hear? I have my volume all the way up.
Thank you, Dale, and the Dallas Regional Chamber team who made this speakers.
Jerome H. Powell took office as...
Okay, he's going to be talking soon. Yeah, Spy's about to dump. I told you guys if we lost that 595.41, Spy would dump. Spy has a big-ass gap fill down here all the way to 592.83. I told you guys Spy would hit 600 and pull back. I literally called it in my video. I told you guys Spy would hit 600 and pull back. I called it perfectly. Like and subscribe for some of the best technical analysis for every single stock. Market will correct, but I think we're going to go a little bit higher before we do. I think we're going to pull up and probably go to about 600, and that's a nice psychological number, and then pull back. We have to break above 599. Damn, how do you know? How do you know, DataZero? How do you know these things? That was 3 days ago. How did DataZero know? The very next day, guess what Spy did? It went to 600 and never came back. Like and subscribe. For the ultimate technical analysis. You've never seen anything like this. When I talk, the market listens. Like and sub or DZ will play commercials. Dude, I have the commercials off. I have the commercials off. Give me super chats or DZ will play commercials. Bro, when you're printing money like me, you do what you want, bro. I'm on my own time. I control the markets. Don't you understand? I do what I want. Yeah, anyone saying I'm late? No. Whenever time I decide to start, or whatever the time I decide to come online, that's the time it is. Yeah, let's get some fucking rockets in the chat. Get this hype up, man. Let's get some hype in the atmosphere. GameStop tracking perfectly. What happens next will shock you. Guys, don't you understand how exciting this is? GameStop is literally about to blow up. If this really... Do you understand what's happening? I really want you to wrap your mind around this. This is really playing out. This is really happening. Nobody has it on lock like this. Nobody has it dialed in like this. And I guarantee, if you are listening to other influencers, you are going to hold the bag when this thing runs. So, ladies and gentlemen, if you want to make sure you do not hold that bag, when the MOAS begins, when the squeeze begins, when the controlled squeeze begins, you better tune in or you're going to get wiped out. AMC with signs of strength. AMC showing signs of strength. AMC breaking out of a macro accumulation. Roaring Kitty will post right when he's told to post. Right when BlackRock tells Roaring Kitty to post, that's when Roaring Kitty will post. Right when BlackRock says Roaring Kitty post.
I don't think this is sustainable. I think the market will correct, but I think we're going to go a little bit higher before we do. I think we're going to pull up and probably go to about 600. And that's a nice psychological number, and then pull back. We have to break above.
We had 14,288 3 days ago. Now we have 14,340. SPY hit 600 and pulled back exactly as expected.
It's not sending any signals that we need to be in a hurry to lower rates. The strength we're currently seeing in the economy gives us the ability to approach our decisions carefully.
SPY dumping the market,
Ultimately,
or
the
Powell
policy
dumping the
rate
market.
will depend on how the incoming
Powell
data and
puts.
the economic outlook evolve. We remain resolute in our commitment to the dual mandate given to us by Congress.
He always says that.
And price stability. Our aim has been to return inflation to our objective without the kind of painful rise in unemployment that has often accompanied past efforts to bring down high inflation.
You can't have deflation. You can't have deflation without fucking unemployment, you dumbass, and you know that. You can't have inflation and then have deflation without some type of pain, you stupid ass. This is why he needs to get fired. He doesn't. If he really knows about the economy, he would understand that.
Desirable result for the communities, families, and businesses we serve. While the task is not complete, we've made a good deal of progress toward that outcome. Thank you very much, and I look forward to our discussion. Removing policy goals, I took another step in reducing Chesney's 2.8%. Core measures of goods and services move to our conversation, and to the Dallas Regional Chamber for the kind invitation to be with you today. I have just a few brief comments on the economy and monetary policy before we move to our conversation. So looking back, the U.S. economy has weathered a global pandemic and its aftermath and is now back to a good place. The economy has made significant progress toward our dual mandate goals of maximum employment and stable prices. The labor market remains in solid condition. Inflation has
The labor
eased
market
substantially
remains in
from its
solid
peak,
condition.
and we believe it is on a sustainable path to our 2% goal.
Oh my God! Stop lying, please.
We are committed to maintaining our economy's strength by returning inflation to our goal while supporting maximum employment. The recent performance of our economy has been remarkably good, by far the best of any major economy in the world. Economic output grew by more than 3% last year and is expanding at a stout 2.5% rate so far this year. Growth in consumer spending has remained strong, supported by increases in disposable income and solid household.
Not this. No, it's not increases in disposable income, you fucking idiot. It's people getting multiple jobs, struggling to keep up. It's not disposable income, you fucking idiot.
Investment in equipment and intangibles has accelerated over the past year. In contrast, activity in the housing sector has been weak.
Disposable
Improving supply
income.
conditions have supported this strong performance of the economy. The labor force has expanded rapidly, and productivity has grown faster over the past 5 years than its pace in the two decades before the pandemic, increasing the productive capacity of the economy and allowing rapid economic
No shit, it
growth
expanded. You
with
guys printed 40% of all the money in
The labor market remains
circulation.
in solid condition, having cooled off from the significantly overheated conditions of a couple of years ago.
Created the
It
biggest
is
bubble
now
in
by many
history.
metrics back to more normal levels that are consistent with our employment mandate. The number of job openings is
guy's
now
a fucking
just
clown.
slightly above the number of unemployed Americans seeking work. The rate at which workers quit their jobs is below the pre-pandemic pace after touching historic highs.
Because
2
ain't
years
nobody
ago.
trying to quit their job right now,
Wages are
boy.
still
They
increasing
trying to hold on
at
to
a
that.
sustainable pace, and hiring has slowed from earlier in the year.
Ain't nobody trying to quit their
The
job
most
right
recent
now.
jobs report for October
Trying to
reflected
hold on for dear
significant
life.
shifts from hurricanes and
Make sure you
labor
guys hit that
strikes,
like button and
making it
subscribe. Hit that
difficult
like
to
button
get
and
a clear
subscribe.
signal. Finally, at 4.1%, the unemployment rate is notably higher than a year ago, but has flattened out in recent months and remains
Bro, I am getting
historically
mad,
low.
bro.
Turning to inflation, the The labor market has cooled to the point where it is no longer a source of significant inflationary pressures.
This shit always makes me
This
mad.
cooling and the substantial improvement in broader supply conditions
'Cause he
have
lies
brought
straight to our
inflation down
face.
significantly over the past 2 years from its mid-2022
There's nothing that makes me more mad than someone lying straight to my face.
above 7%. Progress on inflation has been broad-based. Estimates based on the Consumer Price Index and other data released this week indicate that total PCE prices rose 2.3% over the 12 months ending in October, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%.
Food and energy, which is what most Americans care about, especially most regular Americans, because food and energy take up like 80% of our income. This whole thing's a
Core
joke.
measures of goods and services inflation, excluding housing, fell rapidly over the past 2 years and have returned to rates closer to those consistent with our goals. We expect that these rates will continue to fluctuate in their recent ranges, and we're watching carefully to be sure that they do, however, just as we are closely tracking the gradual decline in housing services inflation, which has yet to fully normalize. Inflation is running much closer to our 2% goal, but it's not there yet, and we are committed to finishing the job.
I don't think
Labor market
inflation's
conditions
ever
are
going to get back to
balanced and
2%.
expectations well anchored,
You
I expect
already
inflation to
started
continue to
lowering
come down
rates.
toward our 2% objective, albeit on a sometimes bumpy.
How are you lowering rates already and you expect inflation to continue to come down? There ain't no fucking way, bro. There's no way rates are coming, the inflation is coming down when you already lowered rates 100 basis points from the top. You did a 50 or no, a 75 basis points. I'm sorry, 75.
Of labor market conditions. Last week, my federal open market committee colleagues and I took
Inflation's
another step
never
in
coming
reducing
back
the degree
down.
of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We're confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained with inflation moving sustainably down to 2%. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks to both sides. We know that
GameStop at
reducing policy restraint too
$27.68,
quickly
AMC at
could hinder
$4.62.
progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment.
Bitcoin
We're moving policy
88,400.
over time to a more normal setting, but the path for getting there is not preset. In considering additional adjustments,
Doge
to the
looks like
target
it's
range
making
for
a
the federal
bull
funds
flag
rate,
maybe.
we will carefully assess incoming data, the evolving outlook, and the balance of risks.
Dollar highly
economy is not
elevated
sending
and
any
VIX is
signals
up.
that
This
we
is
need to
very
be in a
bad
hurry
for
to
the
lower
market.
rates.
Dollar is
Strength we're
highly
currently seeing in the
elevated.
economy gives us the ability to approach our decisions carefully. Ultimately, the path of the policy rate will depend on how the incoming
Market's
data and
about
the
to crash,
economic
memes are about to
outlook
pump.
evolve. We remain resolute in our commitment to the dual mandate given to us by Congress: maximum employment and price stability. Our aim has been to return inflation to our objective without the kind of painful rise in unemployment that has often accompanied past efforts to bring down high inflation.
You mean
That would be a
deflation?
highly desirable result for the communities, families, and businesses we
Normally
serve.
that comes
While
with
the
a
task is not
recession or
complete,
depression,
we've made a good deal
deflation.
of progress toward that
Fucking
outcome.
idiot.
Thank you very much, and I look forward to our discussion.
This guy, bro. Jerome Powell is, bro.
Thank you, Chair Powell, for those remarks. I will note that you are not the only Fed official who is giving a public speech today. Your colleague, Governor Kugler, gave remarks earlier today in Uruguay about the importance of an independent central bank. No particular reason, I'm sure, that was the topic of the day.
No particular reason why an independent central bank is important. Dude, get out of here, bro. Abolish the Fed, bro. Abolish the Fed.
We have a lot of students here today. I'm wondering if you could just explain
250 people in the
general
building. Hit that like button and
why
subscribe. Hit
there
that
is
like
this
button and
bromide
subscribe.
about it's important for the central bank to be politically independent.
Sure, I'd be glad to.
Let me say what we mean by independence.
DJT's
So
coming
what
down,
that
bro.
really means
I
is
told you
that
guys it's going to be a
decisions
buy the
that we
rumor,
make,
sell the news.
about monetary policy, about interest rates, cannot be reversed by any other part
It
of the
filled this
government
gap
except
a little
first
bit, but
Congress.
there's still a little bit
Congress
gap left.
created the Federal Reserve by statute and can do what it wishes to do by statute, but our decisions are not reviewable by any other agency. And we are charged to make those decisions with regard to the medium and longer-term well-being of the public that we serve. So we're not thinking as we make our decisions about the well-being of any political party or anything like that. So we're just looking at the macroeconomics and doing the very best we can. There's been a lot of research.
And you're accountable to nobody. And he literally just says we do the best we can. We hope we don't screw up the entire economy. Listen how arrogant and stupid this guy is, okay? He thinks that he's smart enough that he can control the entire economy and do it correctly. We just do the best we can because we know if we fuck up, we screw you all over. And guess what? We're accountable to nobody.
About central bank independence.
This
And
shit
what it
needs to
shows
go,
is that
bro.
Central banks who are independent, meaning independent from the other parts of the government, do a better job on inflation. And that makes a lot of sense because, we're thinking really just of getting inflation under control while keeping the labor market strong, and we're not thinking of political factors, which would frankly be a distraction to the already difficult work that we have to do the main job. So the academic research is very clear globally, by the way. This has been a global trend for more than the past 50 years. Advanced economies like the United States economy around the world all have central bank independence of one part or another, in one form or another. The other thing I'll add is that what comes with that, on our part, is an obligation to be highly transparent about what we do, to explain ourselves to the public, to Congress. Congress has oversight over the Federal Reserve in our system. So we spend a great deal of time talking to the oversight committees and the broader Congress in the House and the Senate, explaining to them why we're doing what we're doing. I testify as a matter of statute 2 times of the year in each of the House and Senate. So that kind of gives us the accountability that we need to be democratically legitimate in a situation where we do have some independence.
The macroeconomic conditions that you just described in your remarks sound tantalizingly close to a soft landing. I know you're not willing to declare victory yet.
He never will.
To what extent do you think the fact that the
Because in order for it to be a true soft landing, that means that inflation has to go back down. And it hasn't.
Reserve is credibly independent, is responsible for the good outcomes that we've had so far?
So the credibility is really everything in our
This
work.
guy's going to start patting himself on the back and saying soft landing, and right then and there, that's when the market's going to fucking tank, dude. There's no way we have a soft landing unless inflation goes back down. You cannot declare victory unless you do your stupid little dual mandate with stable prices. Prices ain't stable, my boy. Prices ain't stable.
And I think, as you know, inflation spiked really globally, all around the world, as the economies around the world reopened after the pandemic shut down, and on the back of
We
a
got
lot of fiscal
260
and
in the
monetary
building. Make sure you guys
stimulus,
hit
we
that
saw
like
a
button and
burst of
subscribe.
inflation
Help support the channel
all
for
around the world.
absolutely free. Hit that
And
like button and subscribe.
what happened is
SPY
that
getting
we
a
raised
slight
interest
bounce to
rates
the
to
upside
bring that down.
after dumping. I
The
told you guys
public
SPY
had
would hit
faith.
600
You know,
and
we
pull
measure
back.
inflation
This is what we're
expectations in
seeing.
many different ways. Surveys
If
and
SPY
based on
confirms
market-based estimates.
595.41 as
And
resistance,
they all
you're
kinda
going to
showed
see
the
a
same
lot
thing.
of downside. We have a
Public
lot of
all
gap
through all
fills,
this
and SPY is
believed
just built
that
on a
when we
lot
get
of air
inflation
right
down,
now.
we would restore
And
price
it's
stability,
not having
which
a
we
lot of
define
support.
as
It will
2%
dump
inflation.
all the way
And
back
that's
down to here
ultimately
if
the
we
key
start
to it.
losing these levels of support.
Inflation is a social phenomenon. If people believe that inflation will be higher, then it probably will be.
Oh
And
my
if they
God.
believe that inflation will come down, then people who make and
Did this guy just say? Look at her face when he said inflation's. Look at her face when he just said inflation is a social construct. She looked down at the paper and said, "What, bro?" This man just said inflation is a social construct. If we believe prices will go down, they'll go down. Did you know that, guys? We all just got to believe together that prices will go down, and they'll go down. Just believe together. We're not believing enough, apparently, because the prices aren't going down. Did this guy just say
Prices
that?
and wages, they will make sure that it does come down. So it's absolutely critical that we be credible. And part of that is that we responded so forcefully when it became clear that inflation.
Guys, we
needed
just
a
have to
response.
believe prices to come down. Don't
Quite
worry.
forcefully, and we think that helped keep
Just
inflation
believe.
expectations anchored, as we say.
And then one last question, and then we can move on, I promise, on this. There have been times in U.S. history when people look back and say that the Fed was not seen as terribly independent. What did we learn from those episodes, in your view?
Well, if you go back to the period of the high inflation, which I'm old enough to remember, it was during my college years, and basically the public kind of lost faith that the Fed would restore price stability, and you know, the
We're
cost
just,
was,
apparently we're
again,
all not believing hard
very
enough,
high
bro,
and very,
to make
volatile
inflation go away. That's the
quite
problem.
difficult.
The
Business
public's not
conditions
believing hard enough.
Extremely difficult for people on a fixed income. Think what that does. You may have felt it. If you're on a fixed income and prices go up 20%,
He said, think what that would do. You may have felt it. And this guy has no idea what being on a fixed income is like. His family's rich. His whole entire family's rich. Everything's taken care of for him. If he gets sick, he gets the best medical care for free. This guy, bro, this is why you need poor people in office, because these rich motherfuckers don't know what the hell they're talking about.
you're
This
just
guy
in
said
trouble right
believe,
away.
make
So
believe inflation
is
down.
worst for people at the lower end of the income spectrum and the wealth spectrum. So we've seen it here in the United States in the 1970s, actually, and it's not a pretty picture. So, you know, I think this is very widely, by the way, understood and supported. You know, I've spent a lot of time on
This guy probably can't even fathom what having a lower income means. He probably can't even understand what making less than $100,000 a year is.
Capitol Hill, and I think where it really matters on both sides of Capitol Hill, the Senate and the House, in both political parties, there's a broad understanding that an independent
Bitcoin was
central
roughly
bank is very
created
important
around
in serving
2009,
the public
2008.
as best we can. We're not perfect. Everyone
The
makes
white paper
mistakes,
came
but
out in about
you'll get the
2008,
best results if you have people who are just focused on that
and
task.
you could get Bitcoin
and
around
separate from
2009.
politics.
Thanks. A little bit more elaboration from what we heard last week at the press conference on this question.
We started charting it.
In that press conference, you basically downplayed the impact of
2018.
the election on FOMC policy. You said we needed to kind of wait and see, but that does stand in contrast to how the FOMC behaved at the December 2016 meeting, when roughly half of committee participants, according to the transcripts, upgraded
That is a
their economic
possibility.
forecasts
When Trump
based
gets
on
sworn in,
expected
he
changes
could
to
get a
fiscal
little pump.
policy under a Trump administration, and in particular, a previous trifecta in which the Republicans controlled both chambers of Congress and the White
Senate.
House. You were, in fact, one of the policymakers who
Republicans control
made changes
everything
to your
now.
forecast, finding that the staff's assumptions around a tax cut was a reasonable placeholder, which gave you greater confidence in the outlook. Does that approach seem reasonable in the current circumstances? That basically, you know, since the FOMC has been starting to judge some downside risks to the growth outlook, does the election and the results that we have today remove or at least substantially mitigate downside risks to growth?
So, that's your question? So I think it's too early to reach judgments here, and I'll tell you why. So staff,
Spies
the job of
looks like it
staff
might start
is
dumping,
to
dude.
go,
It's getting some
you
bullish
know,
divergence.
and be very nimble and make
Like on the
assessments
smaller
in real
time
much
frame?
like capital markets do. You know, the markets are pricing
But
in
it's showing a lot of
assessments
bearishness
what
here.
policy changes will be
Also,
made and what
it's
their
still
effect
in
on
this
the economy
downtrend.
will
This
be.
downtrend is
And
not
staff
broken.
will do all of that. I think policymakers
So you can confirm that this downtrend is
gonna wait
confirmed.
longer to
It's
see what
not
the
broken.
actual
Spies
effects
in a
will be.
downtrend.
And so, for sure, at our December meeting, will be
Until it breaks this
staff will
downtrend, it's going to keep
present
going down.
what we know. But the thing is, we don't actually really know what
It's getting
policies
some
will
bullish
take place.
divergence.
We know that
RSI is
policies
definitely
in
making higher lows.
Several areas will will change. We don't know how much. We don't know over what time frame. When it comes to fiscal policy, it takes quite a long time
Quantum computing?
to get
Quantum computing is very powerful computers, basically. Simple way to say
a
it.
bill through Congress. And I think this year, what we're looking at is something that doesn't need to get done until the end of the year, and therefore probably won't have any economic effects this year, but it'll be more 25. It'll be 26 or 27. So I think we have time to
Got
to
263
make
people in the
assessments
building
about
right now.
what the net effects of policy changes will be on the economy before we react with policy. That's not to say we won't be doing quite a lot of analysis. And the analysis we do, by the way, is informed by the best research, the best thinking, the best experts, and there's a lot of research on the effect of policy changes on the economy. We'll make those assessments, but I think we'll be careful about changing policy until we have a lot more certainty.
You've spoken before about federal debt as being at unsustainable levels and the potential consequences for growth.
Do you hear? As soon as he mentioned that word debt, did you hear him? He said, "Oh, don't mention that word."
Do we get to a point
Look how uncomfortable he got as soon as she started talking about the debt, bro.
where deficits and debt get so high that it makes your job harder, essentially? That makes it harder for the
Yes, there is that point, and we're there.
Fed to achieve its goals.
It means his job's impossible because the debt's about to explode.
We're not at that point now. I want to be clear that we're not in any way.
He's only saying that because as soon as you say that we're at that point, that means we're at that point.
Taking into account fiscal issues when we make our, let me say it this way, the debt issue is not an issue that is guiding us in making our economic judgments. Fiscal policy can, of course, affect the economy. First of all, we do not have a role of supervising the elected branches that do fiscal policy. In fact, it's the other way around. So we don't give them specific advice. But as I have often said, and as all of my predecessors have noted, the U.S. federal government budget is on an unsustainable path. It's not that the debt we have is at an unsustainable level. It's not. It's that we're on a path that's not going to be sustainable. We have a very large deficit at a time when we're at full employment, and I would just say we know that we're going to need to address that, and it's going to need to be done sooner or later, and sooner is better than later. But I leave it at that.
In addition to the
I bet you
potential
will.
long-term risks that higher deficits and debt present for growth, are there also risks to the functionality of the Treasury market? When shocks hit the market, and if so, how might the Fed respond?
Well, the functioning of the Treasury market is incredibly important, and it does function very well. It's the most liquid and most important, probably, financial market in the world. Certainly
Trump
one of the most
rally
important.
fades as
And,
investors await Powell's
so,
remarks. Bitcoin drops below 90,000.
We did see some, at the beginning of the pandemic, you may remember
That's
that
because it's
the Treasury
consolidating.
market lost
It's going to make its
function
move for
because
100
normally,
bands.
Normally, in an emergency, money flies into the Treasury market, but the pandemic was such an unusual event.
We do need to consolidate and cool down.
Longer-term securities. They only wanted to own
Bitcoin was
effectively
going way
cash,
too
and so
hard, way too
we had
fast.
to jump in and support that. I think more broadly than that, it's just important that the Treasury market remain well regulated, and that companies have an incentive to do intermediation in the Treasury market. It's relatively low risk. It's very important for the economy, and it's important that that be the case.
In the March 2020 episode that you're referring to, the Fed ultimately had to step in as a lender of last resort. Would the Fed do that if there were similar disruptions in the initial issuance of treasuries? That was in the secondary market, as I recall.
We're not a fiscal actor, so that was a situation where we have a mandate.
Look at
that we share
GME,
with
bro.
other
GME
agencies
looks so
to look
bullish.
after the financial stability. After financial stability.
GME looks so
And
bullish, dude.
Part of that is if really important markets break down, and they kind of all broke down at the beginning of the pandemic. They just stopped working. And so we set up a series of facilities to backstop those markets, but they actually didn't get used because just the fact that we had the facilities restored credibility, and the markets started working on their own. It was remarkable. So, in the case of a financial stability event like that, or the global financial crisis, where really the whole global financial system was at risk given the failure of a number of large financial institutions around the world, in those kinds of things we can use these emergency tools, but they're not for every event. They're really for financial stability events.
You mentioned that it's a little bit too early to know what policy beyond the remit of the Fed would look like. You know, we don't know exactly what the fiscal picture will look like.
I'm not sure
But we
about
do
the
know
DJT
directionally
stock,
tariffs
brother.
are likely to go up, right? Even if we don't know how much, if we don't know necessarily if it'll be exactly what was described on the campaign. And I'm wondering how you're thinking about that. Well, go on, sorry.
So what matters for us is we don't stand in judgment over these policies in any way.
GME's going
What matters for us
parabolic,
is
bro.
To what extent
This thing's
will
about
new
to take
policies
off.
have an effect on our mandate goals of maximum employment and price stability, and do we need to change our policy because of these changes in order to achieve those goals? And that's the answer to that question is not obvious. Let's say that there will be some tariffs. We have no idea what that's going to look like. That's one thing. Another thing is, what about retaliation? That changes the picture. In addition, that's happening at a time when there could be fiscal policy, which could be supportive of the economy. So what's really the net effect? We don't take one piece of
This
this.
is the
We're looking
same
at
exact
the whole
setup.
economy. In addition, remember,
The same
this
exact
is
setup
way
before
over a
GameStop
$20
exploded, dude.
trillion economy. Many, many
Exactly
things
the
affect
fucking same,
the
dude.
economy all the
It's the
time.
very same
It's
setup.
not that common that
Nobody
changes
has it locked in like
government
this, bro.
policy have
Nobody.
immediate effects
Nobody has
in the
this.
achievement of our goals.
This is
That could be the
exclusive
case.
for
Of
DataZero
course,
family
we will
only.
use our tools as we're
Nobody
supposed to
has
do
this,
to
bro. This
foster
is,
the achievement
if
of
you don't
maximum
see
employment
it, and
and
if you
price
can't see
stability.
how
That's what we do.
clean,
That's
and
what we always
I
do.
have it,
And we'll do
I
it
have
here.
it so
I'm just
clean
saying,
and so
it's
easy
we're
to
gonna be
read that
careful
you should just be able to look at this
better
picture
understand
and
the net effects
understand
of these
completely
things
what's
as it-
happening.
as it-
Because I have
as
it
those things
so
affect the achievement of our
easily
goals.
understandable.
If you look back to the previous round of trade wars.
The technicals,
under Trump's
the
first term,
fractal,
the Fed staff.
you should just
prepared
be
a
able to
report
see it
in the
all in one
2018
picture
Pillbook where they
instantly.
basically talked
And you can
about, like,
see
whether the Fed should be looking
how
through
bullish we're
any
going
price
and how
increases that result
GameStop
from
literally
tariffs,
went parabolic
and assume
last
that they're,
time
you know, it's a
and then
one-time
took
step up
off.
in prices
We are
as
literally
opposed
going
to,
parabolic again, going into the same bull flag, potentially
And
about to
the
make a
staff said
massive
at the
pump to the
time
upside.
That the Fed should look through the tariff increases so long as, one, you think it's going to be a one-time adjustment and not a series of adjustments, and two, so long as inflation expectations are anchored. It's not obvious that either of those conditions will hold the next time around, right? Back in 2018, we had decades of very low inflation.
3.3 million short shares
Now we've had a much more
on
recent
AMC.
experience with higher inflation.
They're
And as
definitely
you point
loading up
out,
on short shares because they're
there could be a
scared.
series of retaliations and tariffs and counter tariffs. And
You can
counter-tariffs.
tell they're getting a little
So are the
worried. And
risks
cost of
bigger
borrow
this
coming
time
down,
that a price shock could
definitely
feed
indicator.
inflation?
They're different, and we're in a different situation. The debt situation has changed substantially, and you're right, we're not, you know,
We
6
need
years
cost of
ago
borrow to go back up because they are
and
shorting
such,
heavily.
Inflation was
Look how
very
heavily
low,
they're
inflation
shorting. Look at the
expectations were
volume.
low.
Those white
Now,
candles are the volume.
we've come way back down, but
Volume
we're not
has a
back where we were.
divergence
It's a
on
different
cost of borrow
situation.
price.
It's
Like
still running
shorting on
above
AMC is
2%.
very heavy.
We'll take all of that into account. I tell you, though, the answer isn't obvious until we see the actual policies, and even then it's not obvious. So I just think we reserve judgment until we actually know what we're talking about, and I don't want to speculate, I don't want to guess. I think it's more important that we wait and see what actually happens.
Last time around, as you suggested, there were mixed consequences, there were mixed effects, and as I recall, during these previous trade wars, the Fed actually cut rates several times because there were consequences for growth and investment and confidence. So how does the Fed respond if higher tariffs result in both higher prices and slower growth? Do you have the tools to respond to that?
Well, so you're absolutely right. So in 2000 and I guess it was 19, we cut rates 3 times, and that was right after there had been
Do we have the tools to respond to stagflation? The answer is no.
fiscal stimulus, there had been tariffs, and so And it really was because the net effect of what was happening.
Delicioso.
And what was happening around the world.
boy
too,
got his
was
coffee,
global
baby.
Growth was really soft. There was a feeling that the U.S. economy was softening. We
Delivered.
actually cut rates 3 times.
All right, where's
just
everyone in the
beginning
chat? I want to see
mid-year.
everyone drop a rocket or
And
something.
that kind of worked, that restored.
AMC's
confidence. We
fine,
felt
though. You
at
guys
the
gotta
end of
remember,
2019,
AMC
we
doesn't
felt
take off till
like that
GameStop runs.
really worked, and that situation was quite a good one. Of course, then the pandemic arrived, and none of it mattered. So
You're welcome, mad children.
That's the way it happened.
Be
But that's-
safe
that's
while
exactly
driving,
right.
brother. Remember, GameStop doesn't take off, or AMC doesn't take off until GameStop makes the move. Remember what happened last time. So remember, and I'm showing you guys this one time, and one time only, and I need to somehow break it down. But remember last time, this is 5/13. This is the date, 5/13. That's when GameStop started to rip. Okay? That's when AMC ripped as well, 5/13. So when GameStop rips, AMC will rip. Not before. You just got to watch for the signs. It's the same as last time, I believe.
Point though,
Nothing's guaranteed in the stock market, but we have a good map. We have good TA. We have very good TA right now. We're golden.
And I'm not talking about the pandemic. I just mean the way that played out. I don't think we started that year thinking that it would be appropriate to cut rates 3 times. So just know that we will do what we believe is the right thing. That's what we're always going to do. But I think it's really important to reserve judgment and see how this plays out. We're still months away from a new
SPY
administration,
is
let alone
dumping.
real details of what's going to happen, and then
Multiple
being able
gap
to
fills to the
project
downside.
what will be the net effects on the economy.
Another major
SPY
factor
does have
in the
bullish
economy
divergence,
last
so
year
it's
or
going
so,
to
you
trend
said,
down
is
before
immigration.
correcting.
That immigration
And then it's gonna
is
flatten out
a
and correct.
strong reason why
Back up.
supply and demand have gotten closer into alignment.
SPY has bullish
In the past
divergence.
few months,
RSI
we've
trending
already
up,
seen big decreases
price trending
in
down. That means
immigration.
price will trend down,
What effect do you
flatten
think that
out,
is likely to have
and then go back up.
on the macroeconomy in the near term?
So before I answer that, I do want to say that immigration is a question to be addressed by political authorities using such values as they deem appropriate. We're looking at the macroeconomic effects and reporting on them. It's not a question of judging. We don't have a view on the right level of immigration. That is
SPY puts
for the
printing.
voting
SPY
public
puts
and
printing.
and their elected representatives. Okay. But what we saw over 2023
SQQQ is doing okay.
was a surge in immigration.
Right
and
after
also
they
a surge
reverse
in
split it.
the
Isn't it
labor
funny how it
force.
starts to
And
bottom?
It certainly pushed
Yeah.
up economic growth, and it may or may not have had some effect on.
I don't
getting
think
the labor
Bitcoin's
market
going to
back
go
into
down to
balance.
72.
It'll take time to really understand that, but it certainly made for.
If
a bigger
Bitcoin goes to
economy.
72,000,
And,
that's a
we're
very
coming
good
off the
buying
back of
opportunity.
a severe labor shortage.
Any dips,
So
I
there was
believe,
room
are
at
to be
that
bought,
time
not
for
financial
people to
advice. And if
work,
altcoins
they
and
went
crypto
to
pull
work
back,
at roughly the
I'm
same
buying
level
a
as
lot.
Non-immigrants went to work. So that happened. Then the rules changed. The current administration, the Biden administration, changed the rules a few months back, and we've seen that come down. These are judgments that get to be made by elected people about what the right thing for the country as a whole is, not by us. But you ask what the effects will be. You will see. Really, there have been 2 supply side things that have been pushing up U.S. potential output and actual output. One of them is just more workers, and the other one is productivity. And the more workers part of it is probably diminishing in its effects, and so that won't be something that's pushing up overall output. At the same time, the number of job openings has come way down, so it's not clear what the overall effect will be on there's about 1 job opening for every unemployed person now. In terms
They
of
are shorting
productivity,
AMC right now.
Productivity is incredibly important. That's just output per hour, and if you think about it, higher output per hour is.
But don't worry about
the
AMC.
only
Remember,
room
it
for
doesn't
incomes
take
to go
off
up
until
over time
GameStop
among the public.
pumps.
And we've actually had, for the first time in a while, a few years of higher productivity, going back 5 years.
Also,
now.
AMC
This
is breaking out of
incredibly
macro
important and
accumulation.
very positive, and we hope it continues.
AMC has massive amount of sell walls it
And
has
there's
to
no
deal
reason
with.
why it can't. I will say, though, that over
We're
the
writing
last
those buy
50
orders.
years,
You see
if
the
you
buy
look
orders?
if you have 1 or 2 or 3
Do
years
not
of
worry about AMC.
high
It's going to get a
productivity,
bounce
it tends to
before
revert
close.
to the trend really quickly. Because it tends to be driven by longer run things like evolving technology and evolving educational levels and things like that. So you don't tend to get big increases of productivity that are sustained very often. It's quite rare, although it has happened.
I do want to ask you some more questions about productivity, but just
GameStop
one
also
follow-up
has
on
buy
the
orders,
point.
by the way.
So economic growth is about
Look at these
the
buy
size
orders
of
on
the
GameStop.
workforce and how productive that workforce is. I asked before about the consequences of decelerating immigration. What happens if the workforce actually shrinks?
Oh,
as a
wait, they're
result
gone.
of, for example,
No, they're here, but
mass
they're
deportations,
lower.
which may be in the offing.
You know, I'm not going to be comfortable speculating on potential policies. It's not our job to be a commentator on.
No, I'm not asking whether it's good or bad. I'm just
Yeah.
asking,
But
what does it mean if the workforce shrinks?
You know, I mean, I think we can do the arithmetic. If there are fewer workers, there'll be less work done. But we don't. It gets too close to, I just don't want to go there. This is getting me into political issues
Bro is scared to talk, bro.
that I really want to stay as far away from it as I possibly can.
And they commend him for being a coward. They commend him for being a coward.
All right, so let's talk about productivity. You're right. that
This
productivity
has
been an
got
uptrend.
that
I think
background
you know,
noise has to be fake, bro. That shit can't be real. That audience noise, it can't be real, dude.
The last 9 quarters, GDP growth has been above trend, largely because of productivity. To what do you attribute that?
So this is something people will be arguing about in decades from now. But I would give you 4 or 5 candidates. So one of them.
He won't talk about any political issue that's a hot topic right now, but he sure will mess with your stability and be able to afford food, and he'll print money and steal your wealth. He'll do all of that, but he won't comment on immigration because it's a hot topic right now. This guy is a bitch.
Is that in the pandemic, people started a lot of businesses, and many of those fail fairly quickly.
Spy coming down for the gap
Turn
fill.
out to matter, but when there's a burst of activity in
We have
starting
about 8
businesses,
minutes remaining.
there
8 minutes
tend
remaining.
vertically to be
277
higher
people in
productivity,
the
because many
building.
of these are technologically driven, or the
Please
the
hit
use
that
of-
like button and subscribe. Hit that like button, subscribe. Help support the channel for absolutely free. Please hit that like button and subscribe. We have about 8 minutes remaining in the market. I will be playing the rest of this speech.
technology is pushed out into the society. So
I
that's
will be
one.
playing the rest of the
Another is
speech.
that unlike a lot of our
Even when the
for
market
example,
closes.
European countries where they kept the labor force in place, here people had money from government transfers and also from forced savings. They couldn't travel, they couldn't go to restaurants.
Man, they'll
And
never
so
go
they
down,
quit their
dude,
jobs,
because they
and
all
went
watch
and
each
found
other's
other
back.
jobs. And so there was this huge reallocation of people from jobs that they actually didn't want that much to jobs that they wanted more. And we think that's a real factor in this. In addition, given the tremendous labor shortages, a lot of time and effort went into supplementing and people's technological capabilities in ways that substituted for labor. So there's a lot of that.
Can you give
going
an
on.
example of what you mean?
Sure. I mean, just call centers. There's lots of ways to, you can now do call centers, so they're much more automated. We're getting to a place where call centers will be done by artificial intelligence, probably. But also just, you go to a fast food restaurant, which of course I never do anymore at my age. But if you go to a fast food restaurant, a lot of that is.
He never goes to a fast food restaurant because he has a chef cooking for him. Because he's taken care of, because he's a rich fucking oligarch.
I've seen this in airports, actually. You don't
AMC getting a
necessarily
bounce
need
in the
somebody to
close as
take your
expected.
order.
AMC
You've
getting
got
a bounce
this
in the
menu,
close
you
as
punch a
expected.
screen and the
Guys,
food
drop a
appears.
rocket in the chat so I know if the
and
chats
there
are
was
working.
Tremendous incentive to do that when there weren't any workers.
Drop a
You see-
rocket in the
you
chat so I
saw
know the
stores
chat
that
is
didn't
working.
have very many people.
Spy
in
looks like it's probably going to get a
them.
bounce in the
So
close
that's-
as well,
that's an
not
example
financial
of
advice.
I don't think I heard you mention in that response anything about like generative AI. I'm wondering, do you
Looks
think
like
that
Bitcoin is slipping down a little
could
bit here.
be part of a new era?
Bitcoin, I
productivity
want to
acceleration?
consolidate. I want to
You know,
pull back.
Artificial intelligence.
Me personally, any dips
Generative AI is used
down
all the time
underneath, like
by
if it
big
goes
companies
underneath
and
80K is a
modest-sized
huge
companies
buy.
too, and it's certainly having an effect on
Not
productivity.
financial advice.
Generative AI is just in the early stages, and certainly the companies that and the banks.
We
in
are
particular
still well
we
into
deal
the
with
buy zone on
are not
BTC.
really using it yet. They're not really deploying it yet, and they're very aware of the risks in it. So, but over time, I mean, you can find estimates from credible organizations that generative AI will create a burst of productivity, a large burst of productivity in the next decade.
What's
you
the
can also
new?
find
What's the new
skeptics,
Bitcoin rainbow chart?
you know, very credible skeptics who think that that's hugely overdone. The history has always been that, you know, there's innovation, there's technology, it doesn't show up in the productivity statistics at all, and then it shows
So
up
we're
a
in the
lot,
hold
but
zone?
much later. So it's usually later and
And if
bigger
it goes
than
down
we
to
expect.
80K, that's
That may
still
be the case here,
accumulate
because
and
this really,
cheap.
it is an extraordinary set of developments, and you know, the ability to replace a lot of work that's currently done by humans, including well-educated humans, is obvious.
How does that influence your thinking about monetary policy?
You know, it really doesn't in the short term. We keep extremely close tabs on the labor force. If you think about it, monetary policy is trying to keep the economy at
4
maximum
minutes
employment
remaining.
and price stability, trying to use our tools to do that. And that's you're thinking, you know, at 2 or 3 years out, the kind of things that drive longer run productivity and that matter for the longer run are really not tools that are in our hands. The best thing we can do for technological evolution is to create macroeconomic price stability, by which I mean price stability and a good, strong, stable labor market, so that people don't have to worry about inflation, volatile or high. And so that's the most that we can do, I think, best thing we can do.
You mentioned that a lot of the financial institutions that you regulate or you oversee are also experimenting with these new technologies, with AI.
SPY is getting dangerously
Given
close to
that
this gap
so
fill.
much AI is not explainable. You know, it's sort of a black box. A lot of the time, the software engineers or others who work with it cannot
GameStop
explain
getting a
how it
nice
came to the
bounce in
decision
the
that it
close,
did.
and AMC getting a
Does
bounce
that
in the
make it
close
harder
as
to
well.
regulate in the sense that there might be blind spots for certain kinds of systemic risk, right? If banks don't necessarily know.
I think a lot of people are
how they're
waiting for a
coming to
pullback
the
on
decisions
crypto,
that
so
they're coming
people are
to,
definitely going to
and
be
there could
buying
be
the dips.
some, herding
Crypto's about to go on a bull run.
may
People are
not be
definitely going to be
obvious
buying the
from the
dips.
Andy.
It does it raises just that.
I'm
just that
ready
kind
to
of
buy the
question,
dip.
many different
It
questions
has
like that.
everyone
I would
ready to
say
buy the dip.
The good news is, in terms of the institutions we supervise,
I'm definitely buying the dip if I see
we
any type of
understand
pullback
that.
on
They
crypto.
understand it very well. I think people are treating AI very carefully, and they're not just loosing it, at least among the regulated banks. They're not just loosing it.
I'm
on
waiting for it to
their
pull back to
customers
something
and on
decent,
the
waiting
problems they
for
face.
it.
They're being very careful and thoughtful, we believe, or at least I believe, about how they implement it, doing lots of work, but they're
Anything
keeping
under
it
80K would
carefully
be
under
major
wraps
right now.
and you know, not deploying it so much yet in their business. And working,
You
you know,
still have-
everyone's working to understand the technology, where it's going, what it's capable of, what the risks are.
anything under 80K,
And,
75K
you
would
mentioned
be
that.
gold.
It's making decisions, and we often don't know why it makes these decisions. So how do you get after things like discriminatory outcomes in lending if you don't know why it's making its decisions? So it's going to be, you know, challenging, but I would say we're well aware of that, and so are the banks.
You have a 5-year strategic review coming up. How has your experience over the last 5 years made you reevaluate, if at all, the strategy adopted in 2020?
You know, we had a strategic review, and we have a document called our Statement on Longer Run Goals and Monetary Policy Strategy. It's 1 page. The type is getting really
1
small,
minute
so I think
remaining.
we're
1
gonna
minute
go
remaining.
to 2
Hit that
pages
like
next
button
time.
to subscribe. Help support the channel. Hit that
But
like button and
remember,
subscribe.
that was the era where for a long time after the global
We're at
financial crisis, rates around
14,342
the world were
subscribers. Shout out to the
incredibly
new
low.
subs. Welcome to the fam.
For example, major European countries, their longer-term debt was yielding negative 30 basis points and things like that. How do you even understand that? So rates were very, very, very low in the economy, and that's a problem for central banks because we can't cut rates meaningfully below zero, and cutting rates is what we do
The
to support
economic
the
data
economy.
shouldn't
So we
affect
actually
crypto
like
as much as it
having
does.
significantly positive
Things like
interest rates, like we do now.
unemployment
Right.
should
So what we did
maybe,
is,
but
we said
Bitcoin's
there was a whole
fundamentals
literature on how you
are in
deal
the
with,
tokenomics.
in monetary
All you
policy,
need is
how you
demand,
deal
and
with
and it will keep
how
going up.
interest rates stuck at the
Because of the
at
halving
zero
and
in
because of the
effect, and
fixed
you can't
cap.
cut, you're kind of stuck. You can't support the economy. You get into this trap where
Just keep the
growth
demand.
is low, inflation is low, unemployment is high.
Everything
You can't
else
get
should
out
be
of it
irrelevant.
without fiscal policy, and fiscal policy is challenged. So
Okay, so we just got our
there was a
close for
lot of
today.
research done on it, and we took a
GameStop
pretty,
closed green,
mainstream,
AMC
fairly
closed
vanilla
green, AMC
approach to
closed
that,
at
which is,
4.
I won't go into all the details, but it was
AMC closed, and I'm going to play the rest of the speech as well. I will be streaming the rest of the speech. But AMC just closed at 4:58. Looks like we're going to get a little bit of push here in after hours. I'll probably do a video tonight on the channel around 8:30 Eastern Standard Time, 8:30 Eastern Standard Time. So AMC closed at 4:48 or 4:58. I do apologize. GameStop closed at 27.36. SPY 593.39. SQQQs at 32.68. Bitcoin currently at $87,900 or $600. $87,600. Ethereum's at 3,100. Dogecoin 38 cents. BTC well above our $80,000 price target, which I told everyone was coming back in the day. Ladies and gentlemen, like and subscribe for accurate TA every single day. Thank you for watching the DataZero live stream. Now I will commence with Jay Powell.
to have a makeup strategy so that we would promise ex ante to let inflation run a little bit high if it were running too low.
Look how bullish
And the
this
thought
looks.
was if people believe that we'll
Bullish,
do that,
baby.
that's credible, then inflation
GameStop's
will
about to
run.
explode.
That's all we did. 4 months after we announced that the pandemic hit, and then inflation a year after that came up. So the change, 20 years of low
Look
inflation.
how bullish GameStop
ended
looks.
Sort of 4 months or a year and 4 months after we did the framework. So the question we'll be asking in this framework 5 years later is really it revolves around how do we think about the problem of the zero lower bound now? Now that interest rates are substantially higher than they were, substantially higher, is that going to be
Look at this.
so the question
GameStop's
you're
about to
asking is,
explode, bro.
do we,
It's
where
gonna
we review the
consolidate and
framework every
explode.
5 years,
It's
shouldn't we
literally
change
gonna
the
do the
framework
bull
to
flag
reflect
and
that interest
explode.
rates are
I can
higher
fucking
now,
see
so that
it.
some of the changes we
I
made
can fucking
are
see
probably
it.
not necessary. or
I
they can
don't even need the bull flag. I can see it just off of this price structure alone. I've been doing this so long, I can literally just see it. This is a bull flag, and it is hella bullish, and it's literally just pushing on resistance. Like, it's literally so bullish, bro. I wish I could articulate it. It's just pushing on resistance, pushing. It's like, let me through. And when it goes through, it's going to rock it. And that's going to be right around $30. GameStop is setting up to make this move. It's going to be stupid. I don't even need the bull flag here to see it. Right here's our bull flag. We have it. GameStop is literally about to explode, and it's going to go past $30 and rock it. Only DZ fam knows. Only the DataZero family knows. Everyone else
shouldn't
is
be the
just
base case
speculating.
anymore. They might be a case that we can have that remedy at the handy, but at the same time, the base case should be more like a traditional reaction function where you don't promise an overshoot, you just target inflation. We haven't made any decisions, but those are the questions we'll be asking.
You mentioned the prospect of long-term rates being higher, the neutral rate being higher. You've said many times when asked by journalists, among others, about how we know when we've hit the neutral rate, that we know it by its works,
Yeah.
right? Which almost sounds like ecclesiastical or something. How long does it take to evaluate whether we've hit it? When do we know? If there are lags between the time that we hit the neutral rate and that we can see it in its works, does that increase the risk for policy errors?
Let me just take a second and explain. So we move interest rates up and down, but what is high and what is low? Compared to what is the question? You have to have
A
an
move is
estimate
definitely
of
coming here for
something that's
Bitcoin.
kind of
Bollinger
neutral,
Bands
something
are
that-
tightening
a
up.
level
We
of
do
interest
have
rates
red
that's neither
MACD,
pushing the economy up
and we're underneath blue medium line. So a
supporting
big
it, or
move,
dragging it
possibly
down, which would be
down
higher
so
or
far.
stricter
It could
policy.
be bullish consolidation. We need to
We
see.
fully acknowledge that
But this
there's
could be
no-
so far
there's
a
no
big
sort
move
of
down.
either
It's a little too early to
theoretical or
tell.
empirical way to
But
arrive
Bitcoin
at an
is
estimate
definitely
of what
getting
the
ready
neutral rate is that you can really have
to
lot
make a
of
move.
confidence in. So, what does that argue for? It argues for moving carefully. So in our current situation, we feel like
momentum
our
kind of
policy is
fading here on the
restrictive.
alligator
We can't
as
say
well.
exactly how restrictive it is.
This
By
could
that
be
I
a
mean
big
it's
move,
weighing on
move
economic
down,
activity,
possibly a good
lending,
entry.
hiring, and
Not
all that,
financial
because the
advice,
economy was
especially if
overheated and
altcoins
now
will pull back
it's
as
cooled
well.
down and it's
So if
moved
you're looking at
pretty
potential
much as we
altcoins
had hoped
to
it
get
would,
in
which is
before the
that we've got a
altcoin season
gradual
comes,
cooling in the labor market. Inflation's come down a lot.
me personally, I'm going to be looking at altcoins. I already have a lot of Bitcoin, and Bitcoin will make more gains, and it's definitely going to run, and still dominance very high. But I'm also looking into altcoins. Probably going to buy some more Bitcoin anyways, but I'm looking at altcoins. Ethereum, Cardano, Doge is something you could look at. XLM has been doing very well. You can see XLM is actually up right now. XRP has been making moves. XRP is up to 79 cents. XRP is up to XRP making moves, ladies and gentlemen. XRP making moves to new highs that it hasn't been in quite some time.
And the labor market's not quite stabilized, but it's in a good place, so it's actually worked very well. So we've started the process of cutting rates and moving back down toward neutral. I think the right way to find that level is
XRP up
careful
45% for the
You
month.
don't wanna
XLM
move
up
too quickly.
43%.
It-
Those are
you may
two
have
coins to
move
look at.
quickly, because if the labor market were to begin to deteriorate in a serious way, we would want to get ahead of that. But we're not seeing that. So I think what it tells you, as Catherine pointed out, we think that policy works with long and variable lags, to quote Milton Friedman.
Hey, y'all, check this out. Hold on, we got to do the XRP. Hey, yo, check this out. XRP and XLM are making moves. XRP is up 17%, XLM is up 10%. And this is for today only, and this is while Bitcoin is pulling back. XRP hit a high of 79 cents. Keep an eye on XRP and XLM.
Monetary policy does have effects on economic activity, hiring and all that, but with long and variable lags. And that makes it all that much more difficult to know how far to go. I think in this situation, what it calls for is us to be careful, move carefully, and as we sort of reach the range of, or get near the plausible range of neutral levels, it may be the case that we slow the pace of what we're doing, just to increase the chances that we get this right. We're navigating between, as I mentioned in my remarks, the risk that we move
XRP,
too quickly, the risk
baby.
that we move too slowly. We want to go down the middle and get it just right, so that we're providing support
AMC
for the labor
slightly
market,
up
but
here in
also
after hours. I
bringing
figured it
helping
would get a
labor
bounce here in
inflation
after hours.
So going a little slower, if the data let us go a little slower, that seems like the smart thing to do.
So you say that interest rates are still restrictive right now.
Like, see something like this.
But if you look at the CPI numbers that have came out recently, or today's PPI numbers, core CPI is over 3%. I think when I looked, the 1 month rate is higher than the 3 month rate, which is, I believe, higher than the 12-month rate. The economy is booming. The market is on fire. Core PPI came in above expectations today. Business formations are up. Why are we cutting rates? It seems like the economy is doing pretty well.
The economy is doing very well, and that's a great thing. We totally welcome that. But look at the labor market. So what we've seen is a lot of the great data that we've seen has been because of the expanding supply side. Unemployment has moved up from 3.4 to now 4.1. By a significant number of indicators, it's still cooling. Our mandate is not for growth, it's for maximum employment and price stability. But on the inflation data, so we do see inflation continuing on that bumpy path I mentioned. Today's reading was slightly more of an upward bump than we had expected. But I would say the broader trend, if you look back over the last 18 months, we think that's still intact. We're going to tear this report apart and look at all the details. We'll get another report in December before the December meeting. We'll get another labor report. We'll get the final numbers for October by the end of this month. And we'll look at all of that, and we'll make our assessment. We do believe policy is restrictive, and again, I would point to the labor market. It's not clear how restrictive it is. That's a very fair point, and we're well aware of that. And I think we're mindful of the risk that we go too far too fast, but also of the risk that we don't go far enough. It doesn't seem like that's where we are either. It seems like we're right where we need to be. I mean, I do feel like the U.S. economy is in a very good place, and I feel like our policy is in a really good place. We've got a lot of space to cut rates if the economy weakens. In the meantime, we can take the process.
He literally doesn't. He's talking so much right now because anybody who understands what's really going on understands that if everything was okay, he wouldn't be cutting rates at all. And that's why this question is making him go into this huge spiel about the economy's good, don't worry, basically look over here, don't look over here type shit. Like, he's basically like, just focus on stock go up. Just focus on economy good. It's, first of all, if you're a normal person, the economy's not good. And stock market only goes up to the people, that only matters to the people that have money to invest. A poor person on the street that's living paycheck to paycheck doesn't have any stock. Okay? All of us watching right now, we're blessed because we got stock, we got crypto, we got assets, even if it's a little bit. You're still more blessed than the average person. So this shit don't mean nothing to them, bro.
Of reducing rates, we can be careful about that, and that's what we're planning to do.
And I know we're short on time, so one last question. There has been an idea floated to announce who will succeed you as Fed chair in order to possibly exert more influence over monetary policy, a sort of shadow chair, two popes idea. Your term on the Fed's board runs until January 2028, beyond your term as chair, which ends in May 2026. Under what circumstances, if any, would you consider remaining on the Fed's board after your term as chair ends, as Mariner Eccles did for a few years after he was no longer chair?
So I would just say, I'll certainly serve to the end of my.
Spy's eating into this gap fill
and
in after hours.
I've decided in all
It's not going to fill the gap though because it's after hours, but Spy's bleeding.
Getting the job done for the American people.
SQQQ up slightly in after hours.
Focused on that.
Isn't
Well,
it funny,
thank you so
right
much,
as they?
Chair Powell, I really appreciate it.
Isn't it funny, right as the stock market starts to top out, they reverse split SQQQ? Isn't it funny to make it more expensive for the average retail to hedge? This is why I said I'm done with holding, and the stock. Like, I'm only trading. I'm only using the stock market to make my digits go up, and crypto to the moon.
I hate Powell too, bro.
And thank you all for
Thank
attending.
you, Catherine.
I want him gone so bad.
We now have some closing remarks from President Logan.
So we don't care about President Logan, Dallas Federal Reserve Bank.
And timely conversation on the national and global economy. Jay, it's just always great to see you, and I'm
called him
especially
Jay.
excited for the opportunity to bring you here to Dallas, to introduce you to our community, and for you to see the abundance of opportunity the great 11th Federal Reserve District offers. I've had the great privilege of working alongside Jay for many years now, and one of many things I've admired is his ability to communicate with audiences of all sizes, from all backgrounds, and on intricate topics with such depth and clarity that everyone comes out of the room learning something new. This is just a small part of what makes him such a great leader, and I'm thankful for the chance to see this work in action on a regular basis, like we all did here today, and to work alongside him to support the Federal Reserve's mission and in service of the American people. As the Federal Reserve navigates a new economic landscape, I could not think of a better leader to relaunch the Dallas Federal Reserve Bank's Global Perspective Speaker Series. We initiated the Global Perspective Speaking Series in February 2016 to provide the community an opportunity to connect with thought leaders in policy, academia, and business for a conversation on key economic issues. Community engagement is a priority for us at the Dallas Fed, and we appreciate any chance to grow our local presence, to bring new perspectives to the table, and learn more about economic conditions across the district. And we're grateful for the opportunity to bring new, diverse perspectives to the region and learn how these insights shape their understanding of the region, national, and global economy. These conversations are also a critical part of building community partnerships. And I would like to thank our partners at the World Affairs Council and the Dallas Regional Chamber for co-sponsoring today's great event. Community partnerships played a valuable role in bringing this speaker series to life, and I'm excited to officially announce the continuation of Global Perspectives in 2025. On January 16th, we'll be partnering with the United Way of Metropolitan Dallas to bring Kind Snacks founder and executive chairman, Daniel Lebetsky, to Dallas. I'd especially like to recognize Jennifer Sampson and her team at the United Way. Our two organizations have partnered together on a wide range of events for a long time now. I think as of this year, 100 years we've been partnering. And I look forward to working together once again for this special Global Perspectives evening in January. We'll also partner with other community organizations to welcome former president and CEO of the Southwestern Graduate School of Banking at SMU, and now president of the Kansas City Federal Reserve Bank, Jeff Schmid, back to Dallas on April 16th. Governor Adriana Kugler from the Federal Reserve Board of Governors, we're going to bring her back to Houston on October 9th. Governor Kugler was a professor of economics at the University of Houston for several years, and she continues to maintain close ties with many leaders in our district. And Gretchen Watkins, president of Shell Oil Company, we're going to be bringing her to Houston
Shell
on
Oil
November
Company.
18th, and that will bring together our 2025 series.
That script hitting hard.
More information will be available soon on our website, and I hope to see you all there in Dallas and in Houston for these special events in 2025. So before we conclude, I'd just like to make a few acknowledgments. First, an administrative note. There will be a reception in the Crystal Terrace just outside the theater doors featuring light bites and some great conversation. I hope you'll
These
be
guys
joining us,
live
for
such
the
a
reception.
bougie life, bro.
And importantly,
They live such a bougie, comfortable life, bro. Like, they have no problems. They get the best health care. Like, they're so detached from reality, y'all.
there just are so many people to thank for their work in making today happen. And first, I'd like to thank our team at the Dallas Fed. It's an enormous amount of work to put together an event like this, and I'm grateful for all of their work. I'd also like to thank Liz Brailsford of the World Affairs Council and Dale Petrosky of the Dallas Regional Chamber, and both of your teams for collaborating with us to bring this event to the beautiful Fair Park. These partnerships are important to us at the Dallas Fed because they help make events like today possible, allowing us to serve the public by bringing some of the perspectives that inform and influence monetary policy here to the 11th District. Thank you to St. Marshall of the Dallas Regional Chamber Board for kicking off today's event. And thank you to Catherine Rampel of the Washington Post for moderating a dynamic conversation this afternoon. And most of all, thank you to Chair Powell for sharing his perspective with us. And I'd like to thank him for his leadership over the last several years. Our economy is in a very different place today than it was 2 years ago, and that is because of his unwavering leadership. And finally, thank you all for joining us to relaunch the Global Perspective Speaking Series. I hope you enjoyed the afternoon, and I look forward to seeing you in the reception. Thank you very much.
Looks like we got a Discord invitation here. Okay, so that's going to be the National Regional Chamber. That's going to be the end of that. Dallas Regional Chamber. These guys live such a bougie life. Maybe I'm doing the wrong thing. I should be whatever they do. We got a Discord inquiry here. I'm going to go ahead and send that information out. If you want to join the Discord, just hit me up on my email. DataZero Official 5. Bro got an AOL. He's using the old school joint. Hit me up on my email, DataZero Official 5, linked in the description of this live stream and all of my videos. And $75 for a lifetime invite. One of the cheapest and most valuable Discords on YouTube. Actually, not the cheapest and most valuable. It is the cheapest and the most valuable. $75 for your entire life to get exclusive buy and sell signals from the prophet himself. No, I'm just kidding, guys. But no, you do get buy and sell signals, price targets, technical analysis that I don't put anywhere else inside of the Discord. It pays for itself. Go ahead and hit me up. And guess what? It constantly gets improved as we're working on improvements. We could add some bots that could give out signals as well. We also have traders and investors in there dropping their technical analysis and their information, talking about their trades as we all go on our journey to financial freedom together. Because in this market, you're going to need allies because it's a cold, cold world. That lone wolf shit, you can try it. But, yeah. SPY pulling back slightly here in after hours. BTC down as well. BTC down as well. I'm expecting for a pullback consolidation. RSI extremely overbought right now. So we looking frothy on the BTC. Looking frothy on the BTC. We need to pull back a little bit. And then I'm going to be scooping me up some altcoins, so on and so forth. XRP, my third biggest holding other than Ethereum and Bitcoin, is up almost to 80 cents, ladies and gentlemen. I also have XLM as well. Let's see. So Bitcoin, obviously not at all-time highs. Ethereum, obviously not at all-time highs. But XRP is up 15%, ladies and gentlemen. Yeah. Yeah, so I about doubled my XRP because I bought that around 40 cents. It's like 43 or something like that. So almost doubled. XRP not looking bad. XRP not looking bad. I took advantage of the dip when everyone was not worried about it right before the case got brought against it. I scooped some XRP up. Not before, but like during the case. Let's see. I can tell you exactly when. It was August 21st, 2023. And September I also bought some in September. So in August and September, that's when I bought. So here on these dips, you see those dips? August and September. You see those two lows? You see how your boy buys? Look where your boy buys at. Look how I do strategically. When I'm looking to buy an asset, I buy low and sell high. I know it sounds easy, but this is how you have to do it. You have to buy those dips, man. When you see that shit start crashing, everybody like it's over, it's dead, it's never coming back, that's when you go all in. That's when you put in the most. That is when you go all in, ladies and gentlemen. Yeah, they are basically living Hunger Games, right? Straight up. They are the capital, bro. Yeah, so I bought in August and September and bought those dips. Now look. Let's just go from like a medium range because I dollar cost average. About 46%, like I said, about doubled already. Already about doubled. I dollar cost averaged here and here. Yeah, I'm holding XRP, bro. I'm holding. It's not easy to buy low and sell high. It's not easy. All right, guys, you're back for another video.
All right. All right, guys. So if you're watching right now, you're going to get a sneak peek on tonight's video. But I'd appreciate it if you are watching right now. Give the video a click and a like when it does drop. We are going in for the vid. One take, baby. Let's do this. All right. What? I just got to make sure. I know what I'm going to discuss here. GameStop. Okay. And I know what I'm going to let you guys know. All right. Let's do this. All right, guys, you are back for another video with DataZero. We are moving into Friday, the last day of the trading day for this week, and then we'll be moving into next week. I'm going to get you prepared for what you need to know for AMC, GME, stocks, and crypto. Let's hop right in. So the first thing we're going to be talking about is GME. As you can see, GME is apparently tracking with our prediction. This is absolutely insane. And if you look at the characteristics of the price action, you can see that GME is actually very, very similar to what we've seen before the massive breakout to the upside. You can see that GME has this double bottom formation that goes into a falling wedge, which leads into a bull flag, and then you get a major pop to the upside. And this is all when you're breaking out of a macro accumulation. Well, we just had a major move to the upside in a macro accumulation that lasted over a couple of months. We formed a double bottom. We went into a falling wedge, and we are now seemingly forming the bull flag before a massive pump to the upside for GME stock. Ladies and gentlemen, if this plays out, this could get insane. And ironically, we are right around the levels we need to be to see a massive gamma ramp as well. Because if GME breaks and holds $30, you're going to see a massive pump to the upside as well. Last time we broke above and held $30, you can see we got this move here and this move here. It's a major level of support and resistance. And there is a gamma ramp there as well. You could see call options absolutely stacked here for GME, and this is the expiration date of tomorrow, and here's the expiration date of next Friday. Now we want to be looking at max pain for both of the meme stocks, so we're going to look at AMC and GME max pain, letting you guys know where the market makers are going to try to drive these stocks. You got to remember that Friday is one of the most manipulated days for any stock, especially a stock that is highly manipulated like the meme stocks. So max pain right now at time of recording for GameStop is as low as $22, which I do not think they will be getting anywhere near $22 in my personal opinion. And max pain for AMC is sitting at $4.50. So we have $4.50 here for AMC's max pain and $22 for GME's max pain. AMC's max pain, I could see them trying to drive it down to that price. If we get a bullish Friday, that is a good sign for next week to have a bullish week. Now, we are on track for both meme stocks to have the green week that I did predict. I predicted a green week for AMC, and I predicted a green week for GME. You guys can see that we have a green week here for AMC, a green week of 7% here for AMC, and a green week here for GME of 10%. I told you guys the meme stocks are going to start waking up, and that's exactly what we are seeing now. And if we get to those critical levels, $30 for GameStop and $6 for AMC, you could see this thing pop off. Now, interesting thing here for AMC as well is that we are breaking out of the macro accumulation. You guys can see that AMC has a sloping support and resistance. We have now broken above it, and we are using it as support. We also have these buy orders down here as well. Buy orders for AMC and GME, as I'm telling you guys, a long operator, institutions are buying the dip. And we even have more evidence of this as we are seeing articles come out saying that BlackRock is buying GME stock. I posted about this earlier here on the channel. If you just go ahead and go to the community tab or check out our post, we have news articles. BlackRock is increasing their holdings in GME. So I'm telling you guys, institutions are buying the meme stocks. Meme stocks are going bullish. Meme stocks are bottoming. You're about to see a massive pump to the upside. And once GameStop really starts to move,
that's when AMC will start to move. You can see that last time that AMC started to move was around the time of 5:17 to 5:13. Let's go ahead and zoom in here for the daily time frame, and you guys can see that exact day that AMC really started to pump was 5:13. Now I want you to line that up with GameStop. GameStop was rallying all the way from this 995 double bottom, which I called out in the Discord. By the way, hit me up on the Discord. DataZero Official 5 is my email. Hit me up. $75 for a lifetime payment. It literally pays for itself. You guys can hit me up for the information on my email. We played this perfectly, playing that to the upside. $17.50 calls, $11 calls, and $30 calls to the upside. But that's neither here nor there. Hit me up if you guys want to start making that money. You guys can see that we got a massive push to the upside, and we started rallying 5:13. You guys can see 5:13 was when GameStop really started to rip, and that is the exact day that AMC really started to rip. So you can see that GameStop was indeed rallying long before we got the pump on AMC. AMC did make a little bit of move, but it wasn't as aggressive. We really started to see that movement once GameStop started to take off. So if GameStop continues to build in this bull flag, you're going to see a massive pump to the upside. So far, I am just sitting back and enjoying the show because I believe we have this thing dialed in. If we continue to see this thing track, you're going to see an explosion to the upside, especially if GameStop breaks and holds $30. Breaking through these sell walls, breaking through major support and resistance, breaking out of the technicals of the bull flag, you're going to see an explosion. This is why GameStop is consolidating at these levels. It is consolidating right underneath the level that it needs to absolutely explode. This is happening whether you believe it or not. Now, if I were to see GameStop all of a sudden dump for whatever reason, then obviously this would be invalidated. But ladies and gentlemen, look how beautifully it is tracking, and it has been tracking for several days right now. Also, the algo is repeating as well. You can see that it is the exact same price action, the exact same thing happening over and over and over again. And this is why I said this is the controlled squeeze theory. Now, you guys can check out some of my other videos for price targets, but just roughly just going over some of the price targets that we could have real quick. You have these sell walls here for GameStop at $37 to $48. You also have sell walls starting at $50 to $71, and you have a gap fill on the weekly time frame at about $71 to $72. So those are possible price targets for this movement to the upside. So this is what I'm looking at for GameStop. As far as what you can expect for tomorrow, I really don't think that they're going to be driving it down to max pain. What I'm expecting here in after hours is a bit of consolidation here for GameStop stock along the lines of 27.25. If we can continue to hold 27.25 as support, you're going to see a nice push to the upside. One bearish thing that we do have is a gap fill down here at about $26. So if you did see a pullback on Friday, don't be alarmed. We are still inside of the bull flag. As long as we don't go under the levels of, let's say, $26.35, $25, we are still in this bull flag and we are still tracking with the algo. Now, things could get crazy if GameStop does push up because you would get a gamma ramp. We would have to push up past like $28 and $29, $30. So if we do hold 27.25 as support, you could see GameStop just continue to the upside and things could get crazy sooner than expected. Again, the algo seems to be sped up, and the bull flag took about a week last time. So this literally could be shorter than a week before we see the explosion to the upside. Friday, again, is one of the most manipulated days. I really don't think they're going to get anywhere near max pain. But again, if you do see a pullback, don't be worried. Key level to hold for GameStop is 27.25. If you hold that, you could see a continuation to the upside. As far as what you could see for AMC stock tomorrow, I think that AMC stock is going to consolidate along the lines of 457. We could see that pull back towards 450 probably in the later half of the day as they try to drive it down. They do have a significant amount of short shares for both of the meme stocks. That's telling me that they are worried. The reason why they have this many shares is cost to borrow just got obliterated. It's kind of moving up here for GameStop. You can see that it's kind of moving up. It's still very low, 0.40%. and cost to borrow for AMC is 0.58%. Cost to borrow just dropped off a cliff. They're shorting heavily, so we're seeing a divergence. You can see these white candles. That's actually the shorting volume is going up. So we should see cost to borrow pick back up. How they got cost to borrow this low, I don't know. So people are asking me, I don't know how you would just get that type of liquidity and free up cost to borrow like that, especially while shorting more. The stock market is corrupt. That's the best answer I have for that one. But yeah, so I think cost to borrow should start coming back up. If you see cost to borrow spike, that's going to be sign that we're really starting to move. If you see volume pick up in the stock, that's going to be signs we're really starting to move. And if you see the stock start to move after hours, I'm talking about 10, 20, 30% pumps, that is shorts covering and it is beginning. So look for those signs as possible signs that, yes, this thing is kicking off and we're about to see some extreme price action. Again, volume, if you see a huge volume day, if you see the stock start to move in after hours or pre-market, I'm talking like 10, 20, 30% or more. And if you see cost to borrow suddenly spike up as well. So this is what I'm looking at for AMC stock. I don't think they'll be able to get it down towards max pain, but they're definitely going to try. They'll probably short a lot in the later half of the day trying to drive it down in that. So, and I will be live tomorrow, so you guys can tune in, like, and subscribe to continue tracking the meme stocks. Now, as far as SPY is concerned, I think SPY is going to get a bounce. I told you guys numerous times that SPY would hit 600 and pull back. In that legendary video where I keep showing you guys the clip, we hit exactly 698 and then started to pull back from that time period ever since. SPY is below major support and resistance right now. And this is the main thing you got to know about SPY right now. SPY is on a lot of air. We got that huge Trump pump, and now we're sitting on a lot of air. We only have support like way down here at like 583. So if we come crashing down, we're going to come crashing down significantly here on SPY. So watch for that. What I think is going to happen tomorrow, though, I don't think it's going to come crashing down tomorrow. What I actually think is going to happen is we're going to break above the sloping support and resistance, which will confirm that we are actually indeed bottoming from this downtrend that you could have played puts on today. And we're actually going to see a bounce. But I think we're going to drop down in the early morning potentially here. That way we fill this gap. There's a gap fill down here. I think what we're going to see is a fill of that gap and then a bounce up. If we don't fill the gap, that gap will be left down there for next week. I think we're going to see potentially more bearishness next week, and I'll talk about that in the weekly outlook and prediction. But as of right now, I don't think Friday is going to be a crazy drop down. I think it's going to be actually a day of recovery, believe it or not, as SPY potentially starts off the morning bearish and then getting a bounce to the upside. Now, as far as data drops that are going to greatly affect the market, it's retail sales month over month. This is huge. This is going to show basically consumer strength and stuff like that. So you're going to want to watch for that at 8:30. The forecast is that it's coming out lower than previous. So that means it's coming down, which could lead to that bearish drop that you see in the morning. But right now, RSI is so oversold. On SPY, I am expecting to get a bounce. You can see that it's in that oversold territory in the 1 hour time frame, 2 hour time frame. It's not crazy. You still have some room to run to the downside on these bigger time frames, and obviously on the daily time frame. So you could see more downside, but I think what we're going to see is actually a little bit of a bounce after a morning drop. So that's what I'm looking at for SPY in the overall market. Let's go ahead and go into BTC and then crypto and wrap up this video. So two coins making moves right now: XRP and XLM. XRP absolutely exploding, okay? XRP just hit a new high of 82 cents, ladies and gentlemen. This thing is literally moving right now. It's on an absolute tear, up 19% today alone. Congratulations, XRP holders. Another coin to look out that's similar to XRP is XLM. I hold both of these coins. XRP is actually my third biggest holding other than Bitcoin and Ethereum. So this is what we're looking at as far as coins to look at. Other coins that I'm potentially looking at for this bull run coming up: ADA, Dogecoin, and Ethereum. I think are going to do very well in this crypto bull run that is coming. I do not think the crypto bull run is over, but I do think Bitcoin needs to pull back, and I think a decent pullback potentially could be coming. Right now, it's too early to tell, but this could be a setup for a bearish move down. It could be bullish consolidation if we manage to hold, around 88,000. and consolidate, then we could just be consolidating to blast past this new all-time high of 93.5. So this could just be a bullish consolidation, or it could be set up for a bearish move, because you can see that we are definitely overbought on the bigger time frames. Here on the daily, we were like literally riding the bands to the upside. Bitcoin can run hot, and if we consolidate it, it would give us some room to run here on the smaller time frames as RSI is cooling down. But either way, if Bitcoin pulls back, it is a buying opportunity in my personal opinion. I'm going to be looking more into altcoins. Bitcoin is definitely, if you're new to the game, definitely safe, definitely where you want to be. But me personally, I'm going to be looking at altcoins in this stage of the bull run. I think Bitcoin still has a lot of room to run and still has a lot of legs. And Bitcoin is my biggest holding. I do not want to get that twisted. But altcoin season, I do think, is going to be coming here later into 2025 after Bitcoin makes another move to the upside towards 120K before it starts ranging out. Now, Bitcoin could go higher than that, but I think that's where Bitcoin is ultimately headed, like 120K. It's going to like range out around that, and that's when altcoin season is really going to kick off. And some of these altcoins we're seeing move now are going to go absolutely crazy into new all-time highs. So this is what I'm looking at for the cryptocurrency market. I want to see if Bitcoin holds above the level of 85,000. If we can, this could be a bullish consolidation for another move to the upside. If we lose 85,000, you're going to see a decent move down. That would bring altcoins down with it as well. That would be a buying opportunity in my personal opinion. But honestly, BTC is so bullish right now that it looks like it literally might just consolidate and move to the upside. So either way, it might, you know, this rocket ship I think is going to be taking off. And I think the crypto bull run is going to be something extremely, extremely special. I try to explain it on the live streams the best I can to articulate it. But basically, because of the function of the halving and the fixed cap of 21 million coins, as long as Bitcoin has demand, it will continue to go up. And the ETFs are absolutely driving this thing to massive new highs. So I think this crypto bull run is going to be very, very special. And if you're not on the crypto hype train, you might want to take a look into it. I try to make videos on how to buy. Make sure you guys put your coins in your own wallet. Do not keep coins on exchange. When FTX collapsed, all of people's money got wiped out. You do not want to be one of those people. Not your keys, not your coins. I'll try to educate much more about crypto, but I'm telling you guys, the crypto space is where it's at. Me personally, especially with the new 24-hour trading system, I feel like the last little bit of free that was left in the market is gone. Basically, everything's going through a dark pool. I have to do a whole video on that and break down the ATS, the alternative trading system. But anytime you hear ATS, just think dark pool. And now all the orders are basically going through a dark pool now instead of the NYSE. Citadel is literally getting rich off all that payment for order flow. They can literally front run all of your orders because they see all of the orders coming in. They see everything. The market supply and demand is dead. So me personally, I'm going to be using stocks to trade to make my digits go up, in and out. That's how I'm going to do it. In crypto, I am going to be holding, continuing to hold, and also buy and trade and take profits when necessary. Ladies and gentlemen, this was the daily outlook and prediction heading up in for Friday. Hopefully you found the video informative. If you did, go ahead and drop a like and leave a comment down below to help support the channel for absolutely free. And I appreciate you if you watch the end of this video, because so people watching the end. And as always, y'all, have fun, stay safe, make money. Peace. Oh, we got some new subscribers. Thank you guys. 13,000 or 14,345. Holy cow. Blowing up because crypto and GameStop, I think. And AMC. I think Bitcoin's about to just keep going up. Thanks for everybody. We almost got 150 likes. 8 brand new members today. You guys are insane. Ada is up as well. Ada just got a pump. ADA just got a pump. ADA's going to be a coin to watch, I'm telling you guys. Is Apple still breaking down? It's making that bear flag. How's NVIDIA doing? AMC up slightly in after hours. GameStop up slightly in after hours. GameStop might be setting up for a nice bullish Friday tomorrow. And if we hold that 27, 25, man, we're going to pump. They're going to try to push it down, though. They have a lot of shares. All right, guys, that was the live stream for today. I appreciate everybody watching right now. Thank you if you're still watching. Wait. Was the camera off the whole time? I had the camera on while recording, right? Oh, no. Am I that stupid? Am I that stupid? I could have swore I had the camera on. All right, guys, you are back for another video with DataZero. We are moving into Friday. All right, yeah, that was the live stream for today. Sorry for the late start, but we had to get it. We had to get it when it started pumping, you know what I mean? When I knew the pump was coming. We had this little pump here. GameStop did good all day. I will see y'all tomorrow and hopefully on the video. If you guys don't mind, please drop a like on the video. If you've already seen it on the live, just drop a like on the video. Drop a comment on it. I appreciate it. That helps me out a ton. And I will see you all tomorrow. You're welcome, everybody. XRP is going nutty, bro. XRP is going nutty. XRP is still going. Now it's up 20%. Shout out to XRP holders and XLM holders. See you, everybody. Much love, DZ fam. And thank you all for watching.